The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So I'm very excited to announce our next guest because we have so much to talk about with stablecoin hearings appearing in Washington over and over again. And now, even more recent news, we have USDC stablecoin backer Circle doubling in value to $9 billion. And so there's nobody better to discuss this than Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle, and also former Vice Chair of Diem, the artist formerly known as Libra. We'll get to that later. Anyway, welcome, Dante.
Thank you. Great to be back on.
So Dante, let's just get right to the elephant in the room, this $9 billion valuation. Apparently that's doubled since July. What's that about? What caused the valuation to skyrocket to that degree?
Well, I think for one, you could just see it in some ways. It's a tale of two sides of the story, two sides of the coin. On the one hand, we've seen just really impressive growth and increasing mainstream adoption of USDC as the most trusted dollar digital currency in circulation. Today, we stand at just above $52 billion in circulation. And USDC is really instrumental in powering a whole host of economic activity in a frictionless, high trust manner in the US and around the world. And we think, that strong market position has really been one of the core drivers of strengthening Circle's position overall with the public market offering.
So Dante, you mentioned high trust. There are many in the market who want more disclosure out of Circle when it comes to what's on your balance sheet. They think that there needs to be more clarity as to what kind of liquidity Circle truly provides. Why not do so? Why are we still getting this sense that Circle isn't fully disclosing the assets and it's just doing the bare minimum that's legally required, as opposed to what would make the investing public a little more comfortable with it?
Well, there are 2 points to answer that. First is, if you look at the statutory and legal requirements of how we are regulated, major payments companies who are in our ilk and in our class and have comparable regulatory footing today have no requirement from a legal or regulatory point of view to issue anything close to the type of transparency and accounting standards that we support for USDC in circulation. Since the first USDC was issued till today, we have been a standard setter on public trust and accountability with attestations showing proof of reserves. And then frankly, the other point I would make is that there is no better way than to be an American publicly listed company to continue building on that standard of public trust and transparency. So we think those two pieces coming together, along with continued engagement here in Washington, in the House, the Senate, and across the regulatory agencies represented in the President's Working Group, all of that to me is a testament of our company's commitment to trust, transparency, and effectively being a standard setter.
Yeah, nonetheless, I mean, you do see this. I'm sorry, you do see in Washington, you are seeing a lot of pressure, a lot of questions about the safety of stablecoins. Part of it is, again, the lack of disclosure that's found on some of the biggest players, and Circle included. So will you further break down your assets, including commercial paper, any time between now and when you plan to go public?
Well, to be very clear, I think this to me is a topic that's settled news. The idea that first, not all stablecoins are created equal. I have a large paper to that effect that is a byproduct of my recent Senate hearing. The second is that as of today and for quite some time, Circle is strictly holding cash and short-dated U.S. Treasuries, effectively the two safest assets to back all USDC in circulation. And so I think it isn't really adding a lot of value to the conversation about how stablecoins are an important part of the global economic system that we're all talking about, to continue prioritizing the trust and transparency pillar. We think we've set a standard there, and we're continuing to work broadly with stakeholders on what that looks like. And then to the extent that that then becomes federal requirements, we're in the room, very, very deeply contributing to the conversation on national policies for these issues.
So no commercial paper is what you're saying on the balance sheet.
None at all. And the attestations say it. And frankly, again, the point of going public is to heighten the type of public trust, the type of public transparency on a company like ours. as a part of a broad revolution of what is taking place in sort of Web3. And if you think about all the things that you cannot do with your dollar in physical form, Circle and USDC are sort of answering that by importing those dollars and keeping the fundamental trust in the dollar, but importing them onto the internet. You may have seen our ads to that effect as well, about this is exactly how the US can help drive the US winning the digital currency space race.
Well, the latest round of stablecoin hearings that we're hearing in Washington, D.C., there appears to be a developing divide among lawmakers regarding their stance on stablecoins, with some questioning how they are backed, as Lawrence pointed out, and if they are potentially allowing fraudulent actions to occur. So are money laundering concerns with merit? And how, if...
Well,
can they be trusted?
No financial system, however small it may be, is risk-free. And we as a business not only take, I think, great pains to ensure that illicit actors have no place to hide anywhere Circle is directly active. We're also collaborating with industry partners. Just yesterday, we announced, together with a number of major industry players, the Trust Network, which is a network on addressing travel rule compliance. And then before that, we joined a group known as the Crypto Market Integrity Council, which is led by Solidus Labs, that are looking at de-risking DeFi. And you're going to see a host of companion innovations that are really critical to ensuring that financial inclusion, innovation, and financial integrity are not seen as trade-offs. Things around other complex risks that may emerge here. So financial integrity bodies, FinCEN and others, Circle also responded to FinCEN's Bank Secrecy Act modernization consultation very recently. So we're working very deeply to ensure that access to these networks does not pose any risk to the global financial system.
So the Fed minutes that were released yesterday, one of the things that they said was that some participants, meaning on the Fed, saw emerging risks to financial stability associated with the rapid growth of crypto assets and decentralized finance platforms. Included, a major factor in DeFi, of course, is the use of stablecoins, particularly algorithmic stablecoins. How much of a systemic threat do you find algorithmic stablecoins, including the ones that maybe use USDC in part to back them?
Well, so I have a very strong view, and just yesterday, the Financial Stability Board put out a 30-page paper looking at systemic risks to crypto assets, and now $2.6 trillion asset class, stablecoins and DeFi particularly. My only counterpoint to global bodies that are looking at systemic risk and stability risks is that there's also a risk in doing nothing, right? If you think about the fact that so much of our traditional brick and mortar banking system has in some ways reached a point of diminishing returns, the promise and the premise underpinning all of crypto assets is to have much more empowerment, a trusted form of always-on financial markets. These are not substitutes to any of the alternatives. They're just introducing much more optionality for consumers. I think therein lies the opportunity, and it of course behooves all of us, including companies like Circle and others, to lead by example, walk through the front door, and take a regulation-first posture on how these continue to evolve.
But specifically to the algorithmic stablecoin issue, I mean, is it just bluntly? I mean, is this a potential problem waiting to happen?
Well, it's sort of, again, a function of size. And what is the function of always-on dollars, whether they're algorithmic stablecoins or fully reserved-backed stablecoins like USDC or others? The function that DeFi is supporting, no business is risk-free, and DeFi, of course, is not risk-free either. But there are many advantages: price discovery, always-on markets, the ability to have sort of your capital work for you when it would otherwise be idle. These are incredibly promising alternatives. And I think the fact that that alternative asset class can also be powered by algorithmic stablecoins should be embraced. What we have to describe, of course, for ourselves and for regulators are what steps are we taking to provide higher assurance around market conduct, higher assurance around market-facing disclosure. My risk, and the thing I'm most worried about, is that we're doing with enforcement what can otherwise be solved with disclosure. And I think DeFi offers great opportunities to continue growing the market, including with algorithmic stablecoins, but while at the same time harmonizing what type of risk disclosure is necessary.
Dante, I just want to switch topics for a second, addressing another elephant in the room, and that's the death of Diem. For a while, you were kind of the face of the project. Facebook created a stablecoin project called Libra, met with backlash by policymakers. It was renamed Diem. then there were more dead ends, and now the project has effectively shut down and sold its assets off to Silvergate. So I just wanted to hear some of your closing thoughts on some of the lessons learned from the project's demise, and perhaps you could reflect on some of the missteps, perhaps, of Libra/Diem.
Well, it's a project that had many obituaries written even when it was in its very earliest days. But I think, candidly, without it, much of the global conversation around central bank digital currencies, around blockchain strategies, around population scale access to the global financial system, and the fundamental inequities that we have of the way the world and the way money moves today, owe great homage to the Libra project and to Diem. Personally, I would have done it all over again, and I think the role of modernizing global financial infrastructure and doing so in a compliant way, that project in many respects is a standard setter. But it also raises important questions domestically about the state of private sector competition, which actors can and cannot compete in financial services, and the notion of same risk, same rules, technology neutrality is a very powerful regulatory principle that is often cited. But what you find in many cases is that a technology is often being flagged, i.e. blockchain, as a technology that should not be broadly connected to the global financial system. I think those are points we have to continue pushing back against. And the Libra project was really one of the first to highlight those issues.
So Dante, just to follow up on that, I actually agree with that assessment that Libra Diem, definitely sent a ripple effect throughout the world. So in that sense, it did accomplish something. The question is like, what was this ripple effect, right? For example, I know that you've been very critical of central bank digital currencies. China's, for example, China's central bank digital currency, China's basically said Libra sort of lit a fire under them, and they were like, oh, we better catch up. We better do this as quickly as possible, right? So that was one tangible effect. Then that led to a ripple effect around the world, where you have now nearly 90 countries exploring central bank digital currencies because they want to catch up with China, right? So it's like, everyone's like, oh, it's so great, Libra caused all these things to happen, but are they the things that you wanted to happen, right? And then also on the regulatory front, yes, Libra sparked a lot of conversation about regulation, but like not necessarily a positive one. I mean, I think the fact that Facebook was attached to this, and there's such wide distrust of Facebook due to the variety of data scandals, that Libra in some ways triggered distrust by regulators of stablecoins. So basically my question is like, could you argue that maybe Libra would have been better off left in the drafts folder, right? Like is this? I mean, really, did this actually really contribute to a positive thing?
History will tell, I suppose, to give you a more qualified answer on the question. But in a world in which the world was concerned about a digital currency being plugged into global messaging platforms that could reach billions of potential people, I think the point you raised about the EC&Y WeChat Pay connectivity is real, right? And the alternatives to competition should not be, in my humble opinion, that the central banks of the world decide to digitize their thrift, effectively picking winners and losers in the movement of money and potentially eroding confidence in the two-tiered banking system. The alternative is exactly the business model that Circle is proposing, and in our view, the very business model underpinning USDC, which is that you keep the air gap between the central bank, your wallet, and how you spend your money, including in digital form, and then you promote vigorous competition in the free market for how money moves in the 21st century. So we think we're a very deep part of that economic competitiveness story. You may have seen some of the ads we took out in the Financial Times and elsewhere describing how the US could win the digital currency space race. And then most recently, we also partnered with the American Security Project and a group of 40 nonpartisan national security leaders in calling for US leadership on Web3 and US leadership on blockchain and digital currencies as a way to keep pace effectively and win the stakes of this global competition.
I just want to go back quickly to Libra/Diem for one moment, because this was such a big project. It was such an ambitious project. It took up so much bandwidth, so much airtime, so much capital, right? And now the narrative on it is kind of like, okay, we gave it our best shot, but like the regulators shot us down, right? And I just want to there must have been something that Libra/Diem could have done differently, right? I mean, where's the accountability on the part of the project? Like, what could they have done differently potentially to get a different result? Or is this really just like they just did the absolute 100% job and then regulators just wouldn't let it happen?
Well, first, I would encourage you to ask Libra people who stayed slightly longer than I, who could comment on what could have been done differently. I may have to write a book at some point about the experience and the movement of money in the 21st century. But I do think, again, the view of being able to have hearings and a public discourse of where the bright red line is between public interest and private sector innovation with blockchains and crypto assets very broadly is a topic that continues to garner a lot of attention. What we're seeing today in Washington, in a world in which Libra and other projects have maybe scaled down their ambition, is, I think, a little bit more receptivity amongst policymakers and regulators, but nonetheless, the core questions of, can we in fact have financial regulations that are technology neutral and that are not singling out blockchain and crypto assets as excessively risky? I think that discussion is still ongoing. The FSB are still producing papers calling all of crypto assets excessively risky. The President's Working Group on Financial Markets are calling all of this space excessively risky. Frankly, I think we and your publications and your platforms need to do a slightly better job of describing where are there risks in doing nothing and where have the global financial systems effectively failed if status quo is all we have left. And so we're very busy, preoccupied with the risks of this novel sector, but we have to also describe the alternatives in which you and I cannot move money at scale but for stablecoins, open digital wallets, and an open competitive ecosystem that helps power that.
Okay, but I mean, look, there's a difference between what USDC does and Tether does, for instance, and what Facebook does. And that is, Facebook collects an enormous amount of consumer data. It collects an enormous amount of social data, political data, data about people's connections to each other and how they think. And the algorithms are fantastically provocative and also have figured out exactly what pushes people's buttons. Is the fact that Facebook itself decided to put its name on this project the reason why it had to fail?
I would encourage you to ask Facebook that question. I left the Libra project
but you were
in April.
But as somebody who was on the project,
Mm-hmm.
I mean, you must have heard some feedback. Hey, we don't, were they like, oh, great, Facebook is behind this, we should go for it? Or was it, oh God, Facebook is behind this, this is not going to be a good thing? Which one was it?
Well, it was a blend of both, and I think all of it is incredibly well chronicled in the public record about what the world's reactions were. There were a number of hearings all over the world on these topics. I think that part of the story is told. The question remains in my mind a question of, but for large-scale, principled, well-regulated competition on how money moves, there will be a lot of people left on the margins of the global financial system. And so in my view of the world, that was my own motivation for joining, despite some of the complexities that you've pointed out and some of the trust deficit that you pointed out. Until now, I remain unconvinced that unless you have principled, responsible regulation on how money moves, something that I think Circle is deeply contributing to, we'll have billions of people who will remain on the margins of the global financial system. I think that's a journey that's worth pursuing. And it shouldn't come at the expense of people's privacies, nor at the expense of the regulatory system and financial crime compliance. I think that's part of what we all have to demonstrate in the crypto assets market, is that inclusion and compliance are not trade-offs, but that you could have both. So if I'm to read between the lines here, you're saying that, yeah, maybe Facebook was a problem. No, it's a part of a process in which the association that was stood up had governance independent of any single member, and went to great lengths to establish that. That was where I sat. That's why I can't particularly comment on Facebook. It was one member among the many that were in that organization. I think that piece will be told, I think, over time about how earnest those bright lines were in establishing governance and checks and balances in that project. And frankly, the regulators made that very clear as well.
All right. Just rounding out our conversation, Dante, the timeline for going public, do you have one?
Well, it's a lot of that excitement that we've just conveyed early this morning is still, of course, a paradigm of move as quickly as we can, but of course the actual end date of going public is not entirely in our hands. It's a part of a review process that we're working on as we speak, but we're excited about the new deal that was announced this morning.